Welcome back. In this week's Global Economic Week Ahead, key data releases including inflation figures and services and manufacturing PMI prints are set to influence global market trends. And joining us for a look ahead is Jameel Ahmad, Chief Analyst at online trading brokerage GTC. Thank you so much for your time, Jameel. Now, as much as a Fed event may be in the past, we know that investors continue to chew on the outcomes of that event. And of course, last week, we did have the Fed cutting interest rates by 25 basis points. That was the expectation, but there were market participants that were hoping for a jumbo cut. Considering how long the Fed has kept monetary policy tight and I guess stable the same, was this the right decision?
I think they could have gone by a jumbo cut of 50 basis points, to be honest with you, Sanafi. And it's kind of because of what you pointed out. They waited so long between cutting interest rates last week and the end of 2024, whatever central banks have remained active. And at the same time, if you consider some of the weakness that we're seeing now in the United States economy, specifically when it comes to the employment sector, you've had 1 million jobs nearly that were overestimated to have been added to the US economy between March last year and March this year. More recently, we've had 2 very weak monthly job reports when it comes to the NFP. You've also got signals that because jobs are so important to the consumer economy and consumer spending also equates to the largest component of US GDP. So in terms of getting ahead of the game, if there are potential warning signs ahead, especially as we head into Thanksgiving season and Christmas season over the final quarter of 2025, I do think the Fed could have gone by 50 basis points. Just in case we have more weakness with the US economy, whether it's jobs data or other economic metrics, and then the Fed will be under less pressure of those fearing that they've left it too little too late. The Fed are already stuck between a rock and a hard place. You know, we live in a very, let's say, a negative online society where it's very easy to criticize any kind of policy. And when you're the largest central bank of the world and you're also dominating world financial markets and so forth, you just don't want to put yourself into a corner, which is something that one of the other central banks we might speak about, the Bank of England, seems to have put themselves in. And that's why I think that the Fed could have moved by 50. It seems that they're going to move by 25 and then maybe 25 and 25. I just think they could have given themselves less pressure down the line.
Well, before we actually get into the Bank of England and what they did and why, I mean, just still sticking to the Fed, because this week we do have the Fed official speeches that are expected, I think even starting from today. What do you expect to hear, considering that officials seem split between hawkishness and dovishness?
Well, we're starting to see some indications of dissent, and the reason why it's interesting that you mentioned today, because we're supposed to hear from the newly appointed Federal Reserve voting member who was picked by the Trump administration, Mr. Mirren. And actually, he was the one person last week that voted for a 50 basis point cut. So there's a number of questions that we could ask leading to his speech today. Why did he vote for 50? Does he think they should go by more than 50? There were reports that actually he believes that between now and the end of the year, they should go by more than 1 percentage point, 100 basis points. Will we get any clarity on that? Is he maybe a rumored candidate to actually replace Fed Chair Jerome Powell? We don't know, but we do know that obviously his position will be vacated in around 6 to 9 months from now, and somebody has to finally be publicly mentioned as the next Fed Chair. So I think Mirren's going to be very interesting. And then tomorrow we have Powell. But actually between now and the end of the week, we're supposed to have speeches by up to 18 different members of the Federal Reserve. Not everybody has a vote, but everybody has an opinion on where central bank policy should be heading.
All right. Well, I mean, just looking at the current Fed path where we are seeing looser monetary policy, is gold the biggest winner here?
In terms of its milestone highs, yes, it is, because we've hit new historic highs well above 3,700 today. We shouldn't, though, discount what emerging markets are continuing to benefit on a worldwide level. Funds are continuing to go more and more into emerging markets. And given the Fed's stance that they are going to cut interest rates more times, then that means that there's increased awareness towards emerging markets. Also, anybody that's suffered from a strong dollar over recent years, including you guys, the South African rand. Naturally, you're benefiting from the dollar being at its weakest level in more than 2 years. But historically, if we really tell the tale, this is coming towards the weakest we've seen the dollar since before 2020, because obviously we've had so many freak events that have kept the dollar strong, from COVID to the geopolitical crises in Eastern Europe to the strong US economy and so forth. I think there's then going to be winners in emerging market currencies too, including global stock markets.
All right. Well, I mean, yeah, of course, we are expecting the PCE inflation to come out this Friday, where I'm sure maybe there also will be a story of tariffs being told there. But just, I mean, looking at the employment landscape, the inflation landscape in particular when it comes to tariffs, U.S. companies actually have to operate under those conditions. And we haven't actually really rounded up on the most recent earnings season in the U.S. I think the only thing that we've heard on that front is that Trump now wants companies to stop reporting on a quarterly basis, but rather twice a year, as we do in South Africa. I mean, what did this past earnings season in the U.S. reveal about the health of corporate America?
To be honest, corporate America seems to be still going on a good stride. You haven't had any huge data misses. You have not had any huge statements of maybe pessimism or fears about the road ahead. It seems to be corporate America is the train that just continues to go. Whether that remains to be the case heading into 2026, let's see. By the moment, we didn't see corporates that are really showing, eyebrows raised about tariffs or about global economic uncertainty. Nobody seems to be picking up on the data weaknesses in the US economy either. And even before the non-farm payrolls, we did over the first quarter have the first quarterly contraction for close to 2 to 3 years. But none of those signs or signals seems to be impacting corporate America. And that's also helping Wall Street continue to make, again, record highs over record highs. I think we could do another interview in 3 weeks or 4 weeks from now, and we'd still lose count of how many highs, intraday highs that global equities hit in the meantime.
Yeah. Well, Jameel, let's jump back into monetary policy, but outside the U.S. I mean, as much as the market would have hoped for, would have really enjoyed a 50 basis point cut from the Fed, they still got a cut, unlike the Bank of England and the Bank of Japan. Just tell me why that divergence and the thinking here in those banks, and maybe we can zoom into the UK a little bit.
Yeah, the Bank of England, that really is a central bank that's not only backed into a corner, it's stuck in so many different metaphors between a rock and a hard place. It's a needle in a haystack in terms of they can't do anything right at this point. You've got inflation that's continuing to go well above the central bank expectations and the target of 2%. You have a central bank that now have been publicly criticized for moving too late when it comes to cutting interest rates last year. Remember, they were well behind the Federal Reserve, as well as the European Central Bank, that cut interest rates multiple times before the Bank of England moved at last, which was roughly this time last year. Also, you've got political issues, big protests taking place within the United Kingdom right now. So there's some signs of social, I wouldn't say unrest, but definitely opinions being voiced. Labour government, that I would say somewhat pick up in economic activity when they did, take over in the Conservatives. That momentum has truly waned. And basically the Bank of England now facing inflation that might go back above the interest rate target and where the interest rates are set. There's not much that they can do. In terms of the Bank of Japan, I do think that maybe there was a little bit of an opportunity missed. You've got the Federal Reserve that are cutting interest rates. You've got the Bank of Japan that are well in a position to raise interest rates once again. And headed into the final quarter, let's say 2026, we've all talked about how depressed, domestically, the South African rand has been for a number of years. If you look at advanced markets, there's no currency that's as oversold, as depressed, and looking for sunny weather as the Japanese yen. And the Japanese yen will very much enjoy the opportunity to rebound and get some strength back once the Bank of Japan do start to increase interest rates, and that time is coming.
All right. Well, I think we have about 1 minute left, Jameel, but just also what we're expecting this week. We do have economic data prints being released in the Eurozone. What will those be zoning in on?
So the Eurozone data has actually been picking up, I would say modestly, but gradually over the past period. I have to give some credit here, but it keeps to the central bank narrative. the European Central Bank were very aggressive. They've cut interest rates more than half a dozen times over the past 15 months or so. You're starting to see some pickup in economic data. The issue with the Eurozone economy is that it remains in very close proximity to what's happening in Eastern Europe, where the situation does still remain tense. Unfortunately, some of the hopes last month that that three-way summit between Trump and Putin and Trump and Zelensky and the upcoming meeting between the three of them would ease issues, but if you're looking at what's happening on a day-to-day basis, even as recently as last week, those issues are not being eased, and I think that's going to be a thorn on the side of the Eurozone economy for as long as this unfortunate conflict continues.
All right. Well, thank you so much for enlightening us on the economic landscape globally and what we can expect this week, Jameel. That was Jameel Ahmad, Chief Analyst at online trading brokerage GTC, with the global economic week ahead.